I'd like to discuss how to use this double EMA indicator. Okay, so for this, obviously, the you don't have to do anything. You have to just go here. I will be sharing the this thing link for this indicator. But if this indicator does get banned or something like that, here's the source code of that. Okay, so you have to just take a screenshot of it and just directly copy this and paste this in the Pine script. Okay, this is the Pine editor, and that's it. Okay, so coming to how to use this indicator, for this I will like to use Nifty 50. Okay, so here's Nifty 50. The first step before you do anything is actually open this thing, the weekly chart. Okay, which is here. Okay, so a green signal is a buy and a red signal is a sell. Okay, so on this own the indicator doesn't work so well. Okay, so because the market is meant to be like that, it is meant to fake you out. Okay, so for this the first prerequisite is that this thing, the market should be bullish. Okay, what do you mean by bullish? That market should be going up. Now how to do that objectively is using this indicator. Okay, so we will go for the COVID lows. Okay, so we'll start here. Okay, this is the weekly chart. Okay, your first goal will, let's say we've invested in this. Okay, whenever you get a bearish signal on the weekly, which is here. Okay, for now I'll show you. Okay, let's say the COVID crash had happened and then the market is down. Okay, okay, so this is where you get your buy signal. Okay, for now just ignore this. I will actually explain you how to avoid this and what to do here. Okay, this is where you get a bullish signal. The next step when you get a bullish signal on the weekly is to go on the daily. Okay, when you have a bullish signal on the this thing weekly, you will obviously have a bullish signal on the let's say you have a bullish signal on weekly, you will have a bullish signal on the daily much before that, because obviously the daily closes much before weekly. Okay, as you can see here. Okay, obviously you do not buy this, you do not buy into the FOMO, you wait for the market to unfold, which happens here. Okay, there's nothing for now. Okay, so the moment you get this, right, the first red thing you get, this is where most people will be selling, because this is where the market will be down for, like, let's say 5%. Okay, you wait for the next green thing to form, which is this green signal, and this is where you buy. Okay, you buy this and your stop loss will be somewhere here. Okay, this is where you get a stop loss. That's okay. Okay, still you repeat this, you buy at every dip. Okay, so you get a red bar here, you are waiting for a green signal to form, which happens here. Again you do this, you put a stop loss here and then you let it go. Same thing, you get another this thing entry here. Now there's a way you could have avoided this, but for now I will just keep it simple. You buy, you suffer a stop loss, you let it go. You make how much loss you make, you get a green signal here, right? So the stop loss will be 2.35%. Okay, you do adhere to your stop loss. Okay, here what is the stop loss? The stop loss is 5%, and you end up picking 11%, and obviously it goes further than that. Okay, again, this is not cherry picking, just let market play what it wants to do. Okay, again, so now this is where you this thing will be ending in a profit. Okay, again you let it go, whatever time frame horizon you have. Okay, now so what is this thing funda? So one entry. Okay, entry one is that you wait for the weekly to be bullish. Okay, that's your green signal. Okay, then you wait daily to be red, which is the red signal, which will be this on the daily. You have to just change your this thing time frames from weekly to daily. Then you wait for daily green, and that is your buy signal. Okay, that is your buy signal. Okay, now for now we'll let this play. Okay, actually we'll cancel this. Okay, so where were we were somewhere here. Okay, this is where we bought this thing low, and then we let it go. Okay, now this is the weekly chart. This is where you get your first red signal. Okay, when you get your red signal, first red signal, right, again this is like just like buying the dip. you can buy the next green bar. So the same funda on the weekly also. This will be a little bigger trade. You buy here, you wait for the red signal is formed here, you wait for the first green signal which have forms here, okay. And this, as you can see, it fails, okay. This is a second signal which forms, which also fails, okay. And when you get two failed signals in a row, right, that's when you do not trade, okay, for now, okay. And this is where your this thing setup, you get a separate setup back again. This is where you get a green signal. When you get a green signal, this dip, right, this is the same thing as you can see, there's no red signal here, as you can see, okay. So whenever you get, let's say this was a red signal first, and then you get a green signal. When this happens, right, this is your stop loss. When you get a first red signal, right, if you want, you can actually get out prematurely, okay. So this is the red signal, and you can just cut your trade. So technically you do not lose a lot, but yes, it's a losing trade, okay. This is where you will actually burn your hands in the ranging market, okay. But yes, this is a very good place to add your SIP. So if you are doing a SIP trade, I think this is a very good trade, okay. Okay, so this is where our setup comes again. This is where you get a green. The first thing you want to do is, obviously you can see the green bar, the green signal form on the daily beforehand only, okay. Again, you can trade this on the daily, which will give you some points, but yeah, for an investment standpoint, okay, doesn't work that, okay. You want a red this thing signal to form, okay. This is your red first red signal. You're waiting for the first green signal now after this, which is this, okay. Okay, again, this is very important that a weekly is bullish with you. Weekly should be green, and then this should happen. Exactly what I'm saying, okay. And then you just buy. And obviously this continues, okay, for a long time, for a long time. So this is how you can buy into the dips and be profitable, okay. It is the same thing here. You get a first red signal. This is on the weekly, by the way, okay. You get a first red signal, you buy here, you buy, you using same thing here, you're buying here. So as you can see, this is where you burn your hands. This is one, okay, that's two, okay, that's one, that's two, okay. If you want, you can again buy this directly, okay, if you are brave enough. Like what will happen most of the time when people suffer 2 or 3 4 losses in a row, they will think, okay, this is not working, okay. But so that's why you have to maintain the position size. Matlab, let's say you have a capital of 1 lakh, okay. Make sure you do not risk more than 5%, okay, because let's say you do lose 10%, okay. So now right now you have only 90,000. Unless you have lots of money to get your capital back to 1 lakh, it will be very difficult for you to trade in that probability manner. Matlab, now you have 90,000, right? So to actually make 1 lakh, I think it takes more than 10% actually. So it is easier to lose money than to gain money. That's what I'm saying, okay. This is where you get one trade, another trade. As you can see, these trades work fantastic. They actually outbeat this in every way possible, okay. Here also you get a dip, you buy this, okay. Now this is where it gets this thing, okay. This is where you get a first red signal, and this is where you buy and you actually suffer a loss, okay. That's okay. This is what I'm saying. Now that's one loss for this year, okay, 2024, and this is where you get your buy signal. That's a clear buy. As you can see, this is weekly chart. So if you use a weekly chart, right, there's a very high chance that you will actually not get a bad signal, because right now our Indian market is trendy, okay. Same thing here. So now what I am waiting, I never buy the weekly usually, okay. As you can see here, this is very important for you now, okay. So now let's say your this thing weekly is bearish, okay. Here, you know, your red is there, then you get a green signal. Now after green, this should continue, but this starts failing, okay. So this is when you get a red signal, right? So this is where you should be little cautious, okay. So that means, what do you mean by cautious, okay? That means on the daily, if you do end up getting green signal, you have to ignore that, okay. This is a green signal you get. This you have to ignore, okay, because weekly is still bearish. Weekly is not showing any signs of bullishness. Matlab, it did not show you any green signal, okay. You have to ignore this. This same like this, okay. This whole strategy was on that only. When you get this red signal, right, everyone is like, okay, the market is going down, and all indicators are flashing red, Okay, this is where we just wait, and then we wait for the green signal and it just goes boom boom. Okay, the same thing. Okay, you're basically going against the trend, but I'm not against the trend, but against the media or whoever is trying to sell you fake things. Okay, now this has actually worked a lot of times. Okay, as you can see here, so every market has a lot of cycles, right? So this was a very first aggressive phase, okay, which happened after COVID, the first bottom. Okay, the second bottom was this during 2022. Okay, now the third bottom is forming somewhere here, 2025 we are in. Okay, and again this bottom is after this bottom, right? This rally probably will be the weakest rally, not the strongest, but yes, it will go up, but it will be the weakest. Okay, as you can see, small caps, they are actually down by 50-70%, but only large caps have recovered. It's like that. It's the same thing. So coming to 2008, right? Yeah, same thing here. First aggressive move, then for 2 years the same thing. 2013, nothing happens. Then the next move, okay, the third wave. Okay, then this is another wave, and then this is the weakest wave, which happened just before COVID. So before COVID also the market was very little, you can say, old, and it did not give you much return, 61%, but still, as you can, if you consider the other ones, right, it is much more. Okay, 92%, and this is the other wave, obviously, which is 160%. 73%. Okay, same thing here is the first wave. Okay, 130%. This is the second wave, 60%. Obviously now you'll be, whatever gains you'll be getting for this wave, it will be much lesser than that. I presume close to 30%. That's looks good. Okay, if you want, you can use a projection. So this is how you use the indicator. If you want, obviously you can go back in time also, it will work. Okay, so basically this the best thing about this indicator is you can use it for weekly direction. Okay, so you don't have to put anything, you have to just open. So these are the default settings I put. So why I put 5 and 20 is because in a week there are 5 days and there are 20 days in a month. Okay, why 4 and 12 is because every company, whatever, there's something called quarterly shift, which is what I actually follow. That means results do come after every 3 months, right? So 4 weeks in a month and 12 weeks for a quarter. Okay, that's 3 months. So that's when this thing, what is that, actual money shift take place. Okay, let's say let's consider any this thing, stock. Let's consider some random stock we'll consider. Okay, let's consider Ambuja Cements. Okay, these are the earning events. If you actually see, right, not a proper trendy stock, but still we'll consider this. Okay, we'll consider monthly. Okay, I think by weekly is really better. Okay, you'll actually see that usually the earnings month are usually the bottoms or the tops. Okay, that means here, which is this is your this thing, whatever earnings is this is your 22nd 22 December, which is, this is the low for now. As you can see, this is the low. Okay, this is another this thing earning. So usually these earnings, whatever like this thing, ballistic earnings, meaning what they are like out of the range, like something which is like too good or too bad. These earnings do make tops or bottom. Mind you, it is just not good earnings or bad earnings. Okay, you can have really bad earnings and the market actually bottoms out and goes up, and you can have the best and the best earnings and the market tops. Okay, this is the distinct top. As you can see, this is very tops and comes down. Obviously it doesn't have to be that exact thing, but yes, it does stop there. This is another this thing low, obviously, and the other, so once this thing bottom is formed, the other earnings just act as a catalyst. As you can see, this earning comes and just goes boom boom boom. Okay, this was one of the bottoms which I marked. Okay, this one, then this one. Again, as you can see, this is a local top. Okay, for this, from here it just stops, everyone thinks. Okay, and then it comes down. Then again, as you can see, this is a red earning. That means it was a bad earning, but still it bottoms out because the market was in a bullish trend. Okay, here also this two earnings basically make that the top, you can see. But here, from here it does go up, but but yeah, as you can see. So the most this is just like COVID. When the COVID did pan out, the worst time was actually the bottom. Okay, and from that it just keeps getting better. If you want, actually you can play with this weekly and make this something like this thing. 9 you can make this, okay, 4 and 9. Why 9? Because RBI does change its repo rates, the interest rates, every 2 months, okay, so you can consider that also, whatever works for you. I feel this is a very robust thing because there are 4 quarters, right? And I think this is really good. You can use it for other this thing also. This is on Nifty IT again. One of the disadvantage of this strategy, and actually even most of the strategies, they will fail to work in a ranging market. So once you feel like it is in the range, as you can see here, these signals won't work, okay, these signals won't work, okay, it will be very difficult. Once it comes out of this thing, then yes, amazing signals you'll get, which is one app signal is actually happening in Nifty IT. Yes. Oh, and okay, yeah, that's it. That's it for now. Yeah, as you can see, there's another way you can actually enter stocks, which is something actually I don't like, or but people do consider that, is that it's a very aggressive entry. The moment price does dip, so there are these two lines, right? As you can see, the moment price dips below these lines, right, you just buy, okay. That means when you got this green signal, right, this weekly signal, if you remember, I think we got a signal somewhere here only, right? I don't know, let me see. Yeah, so we do get this thing, right, a red signal here. So in this strategy, the moment you get the price actually goes below this, right, so this is a blue line, right, you buy this, okay. It's a very aggressive entry, and obviously your stop is here, and as you can see, you end up losing, okay. I mean, it's the same thing because you wait for the green, but it is much more aggressive. Matlab, the moment the day it gaps down here, right, this one, as you can see, these 3 candles, you buy that, okay, you just buy that, and then you wait for God. Obviously, with this, obviously your stop loss is very low. Let's say you buy this candle, will be little this thing, not much. Here you buy, it's not much, it is 1.58%, okay, as compared to this where you get a green signal. By the time it closes, right, the next day you have to open, right, it's around 3.1%, so around almost double, you can say, or triple, you can say. Again, there's another entry for, so this again, as you can see, it fails, okay. But if we actually go here, okay, not here also, this one, okay, this is where it actually works. As you can see, this is where you get a first entry, but that entry, red and green, this is what I was talking about, this one. The moment it closes below here, right, this is where you buy. As you can see, this was the perfect low, okay, from that, and then from that it just goes up. But again, for this you need to be very skilled, because for this kind of moves, right, it is like just one kind of move, and it is not for something like this thing long term basis, because it market does shift very fast, okay. So obviously we'll consider this something like this thing, this is what, okay, this for this, okay. Let's say now you get a green signal here, okay, on the weekly you get a green signal, here you get a weak this thing, green signal. So this is the green signal of that week, so it is gets over on Friday. So this is where it opens, and here, okay, the moment it opens here, right, I think this was this thing, Israel this thing battle or something, this is where you buy, okay, and obviously the stop loss will be below the low. If you want, you can buy at the close, and yeah, as you can see, the stop loss is just 0.10%, and then the next day you get 5%, okay. So again, the same thing. Now here, as you can see, same thing happens here. This day it closes below this, whatever it opens or whatever goes below this, and then obviously you buy this, okay. You do get 2.5%, but then today after this, whatever the war, this will be your stop loss, and it does get hit, okay. So you have some disadvantage and advantage with this method, but again, I do not like it much because of this, because you end up playing both the sides, and then you do not get anything, okay. So it's better to stick to one thing, and then to just hop around, and then that's it. You can do the same thing for the bearish trade, and that's it. Yeah, have a nice day. Thank you.